Hello YouTube, welcome to the channel. Hopefully you are having a wonderful day, and if you are, you could go down and smash that like button for me because it truly does help out a small channel like mine. This video is going to be covering a particular growth stock that I've been looking into. I've been kind of changing up my video making style to talk more about the stuff that excites me, the growth aspect of the market. And this is the way that I personally invest. So if you're interested in these kind of videos, make sure you go down and smash the subscribe button, hit that bell notification so you're alerted of any time I make a video on a growth stock so you can form your own opinion on the stock. I do a lot of research into the company and I like to provide that research to you guys in this video, but still it is within your best interest to do your own research on top of that to form your own opinion on the stock that I cover. Now that we got all that boring junk out of the way, let's get into the video. So in today's video, we're going to be covering a stock called Upwork. Ticker symbol is UPWK. If you don't know what Upwork is, they're basically a freelance, or they're somewhere in between, you know, a LinkedIn and Indeed, Fiverr. I would say they're a more professional version of Fiverr with also the benefits of LinkedIn and Indeed wrapped all into the company as a whole. If you have never seen any of these videos before, I like to go through pros, cons, my opinion, and then I like to kind of show you guys in numbers what kind of potential gain you could have in a stock if you invested $100 today. First, let's knock out the pros. So the first pro is that they have a gross margin of 72%. That's a healthy gross margin, especially when you're talking about an internet company. Another pro is as people start getting used to working from home with everything happening around the world with COVID and all that, remote work is going to increase, or people are going to go from losing their job to starting a side gig, or even turning a side gig they had into an actual job, and they're going to use sites like Upwork to do that. So the next pro has to do kind of with an opinion. This is kind of a little bit of blurring opinion and a pro together. So we know that Silicon Valley and a lot of Silicon Valley companies are looking to move out of Silicon Valley and do remote work around the United States. And how are they going to find people to fill those jobs around the United States, other than just moving the people that are already working in California to the remote locations, or those people moving where they want to move? They're going to have to hire, and they're going to need some type of infrastructure to do that hiring. Upwork offers already built infrastructure in which they can partner with to find the right people, or even if they're just doing a small project, a big company is doing a small project on the side, they can use a product like Upwork to find somebody to accomplish whatever little task that is that the business is trying to do. Being that this company is already in Silicon Valley, it probably has a lot of the same connections to a lot of these Silicon Valley companies. So the next pro, I was listening to the conference call, and at the end of the conference call, or at the end of their statement in the conference call, they said that they had a massive slowdown in the middle of the Q1 due to the COVID and everything going on with the virus. So the next pro is they are going to have earnings on August 4th, and I could see a huge beat by this company. Based on them giving a super conservative guidance and the potential for the gig economy to be exploding because of the virus, I see that there's a lot of benefits that Upwork could have gained from going through this time in their company. They said at the end of their conference call, or the end of their statement in the conference call, that they saw a massive slowdown initially, but then at the end of the quarter they saw an even higher spike that they didn't have prior to it. So I believe they gave a conservative guidance, and they're going to beat that by a handily amount that's going to cause the stock to spike in the short term. I like to cover addressable market in the pros. This is directly from the conference call. Their addressable market in the next 5 to 10 years is $560 billion. They currently have 130,000 users, and they have $130 million of cash on their books. So that was a lot of pros. Now I want to go into the cons. Cons, obviously they have a lot of competitors in Fiverr, LinkedIn, and Indeed. I do see though that this could be a potential con because all of their competitors are either owned by a competitor of the companies that are going to be looking to use a service like this, or they're not an American-based company, which could cause people to focus or to look at Upwork, which is an American-based company. because you have LinkedIn, which is owned by Microsoft, Indeed, which is a Japanese company, and then Fiverr, which is an Israeli company. And then the other con is they are going to be increasing their marketing spend because they do want to become the main player in this space, and that causes for a lot of marketing. I covered most of my opinions in the other portions, the pros and the cons, but I'll go over them again. Losses of jobs, which we see around the country, are going to lead to more freelancing or more gig economy type things. Silicon Valley is moving to a remote working situation. There's the potential for Upwork to become that infrastructure that they use when they're hiring remote work. This is a secret potential COVID winner because this transition would have taken a long time. This may have expedited the ramp of the gig economy, essentially. So now we get into the very last part of this video. The way I like to look at this is if you invested $100 today, how many shares would you get, what the company is worth, and then I like to make an opinion on where I see this company is going to be within the next 5 years, and that's how I like to invest. The current stock price is just a little bit above $15, so I just went with an even $15. If you had $100 to spend, you could buy 6 shares, which would be about $90. The current market cap is $1.5 billion. My honest opinion is that they're only going to be one of multiple players in this space. So this is my conservative estimate that they're going to be about a $100 billion company. That's the estimate that I went with. If the company goes from 1.5 billion to 100 billion, the stock price would be $1,000 at 6 shares. That's $6,000. That's my personal estimate. If they achieve what the company believes they're going to achieve and actually acquire that whole market of $560 billion, the stock price would be $5,600 at 6 shares. That's a potential gain of $33,600. Based on the current information that we have, this is what the company will be. I hope that this kind of video was helpful. I hope you guys liked it. If you did, again, make sure you go down, smash that like button, and then you hit the subscribe button so you can get more videos like this. And I love and appreciate you guys so much. Thanks. Peace.